Let's talk more about Asia. We're back with our guest host, Johanna Chua, Chief Economist, Asia Pacific at Citi. It seems like we've just seen in 2011 imbalances also start to happen across Asia in terms of growth. What do you think 2012 holds?
Well, I think 2012 definitely, I think the primary linkage to the weakness that's happening in the developed market is going to show up in trade. So we are expecting the region's going to slow down from 7.3% as a whole in the region to about 6.9% next year. And China in particular, we expect will slow from 9.1 to about 8.4%.
We've seen some of the events already putting pressure on Asia, but the numbers out this morning from South Korea showed an economy that's still somewhat protected, even though the rate is slowing a little bit. We had growth of 0.8%. I mean, this is down. We had 1.3% in the first quarter, 0.9% in the second quarter, now 0.8%. So the trend is slower, but how much
not
slower?
Dramatic, right? No, I think obviously one of the reasons that's kind of helping the region is some of these countries in Asia have buffers in terms of domestic demand, providing an offsetting support. And actually, the U.S. data hasn't been that bad. So even though you have very weak European data, we have to not forget the fact that U.S. data is actually surprised on the upside. I mean, look at some of the ISM numbers coming out of the U.S. And even China, although China is slowing down, it's not slowing down dramatically. You look at our forecast for fixed asset investment. I mean, of course, there are definitely strains in property investment, but it's not sort of collapsing at this point. So I think, there's a bit of lagged impact. I mean, I think we still expect growth will continue to weaken next year, but I think, there's some policy support from a lot of these countries.
So China's GDP should have an 8 handle on it next year, do you think, Johanna?
Yes, I mean, I think, we actually think by the first quarter it could actually fall below 8. It could be around 7.9% in the first quarter. And then I think we're going to see policy response.
Speaking of the policy response then, what does it look like and just how stimulatory will it be for domestic consumption?
Sure. I mean, I think, unfortunately, unlike, in 2008 during Lehman, I don't think Asia, including China, has as much, monetary flexibility to stimulate the economy, even fiscal, given that, you have, inflation, even though it's coming down, is still a little high, and you still have a lot of stock of credit and financing. So I think you will see a few more RRR cuts, but I don't think you can see a policy rate cut. Because even if inflation falls to 4, I mean, 1-year deposit rate is 3.5. So you've got negative real deposit rates. It makes it very difficult to cut rates in a negative real rate environment.
I'm just curious, I mean, broadly, is there enough demand, is there enough momentum within Asia to pick up the slack from the weakness in the more advanced economies in the West?
It won't fully offset, clearly because Europe is very large and US it won't fully offset, but it will provide some buffer. And I think I mentioned, I think fiscal policy could be a pretty potent tool for a number of countries, including China, to try to sort of stimulate growth. So for example, if property investment slows down significantly next year in China, we hope infrastructure investment could pick up again a little bit. And then hopefully we'll have some social housing, which will offset commercial housing sort of slow down. So there's some policy flexibility.
Okay. Well, we're going to continue our discussion in just a few minutes with Johanna Chua from Citi. She's staying with us, our guest host here.